Coming up, the last episode of 2024's Plugged In series.
Oh, good. I thought you were going to say forever we'd been canceled. But just for 2024.
Just for 2024, we're going to wrap things up. I brought a little champagne for my man, Steve Williams, to enjoy as we're here. We're going to pop some bottles.
Wow.
We might be talking models. Financial
Bottles
models.
And
financial models, that is. And, just doing some cool stuff. So there you go. To all of our listeners, thanks for joining us throughout the year. This is going to be kind of a bold and maybe slightly reckless grab bag of predictions for the upcoming year. We're coming off of a 12-month stretch where things really were interesting. And so Steve and I wanted to just
get the bubbles on the mic if I can.
Bubble it up.
I will fake them. But there's champagne flowing here.
Well, the champagne
in the studio.
We want to send some toasts to people. We want to acknowledge some things that have really been impressive.
Mm-hmm.
We also want to call out some of the challenges that we think people need to keep in mind as we plan for the first quarter of 2025. And so, in the past, we've used music. We're going to continue to do that. Mm-hmm. I haven't had a chance to look at Steve's unwrapped Spotify playlist, but if memory serves, at this time last year, it was all Taylor.
Right, and I stopped doing soccer driving, so I dropped off Taylor's 1%, and I became an old guy again with Springsteen, U2, and Journey. So
party.
Yeah, so it was fun being on Tay-Tay's 0.1% during 23, but it didn't happen in 24, and that's one of the big headlines of the year.
That is the headline for Plugged In, is that Steve is back in business. But what else is back in business is the M&A cycle in the banking space. So I had to write this down because there were a lot of deals that were announced this year that I think give people confidence that the next few years is going to be really a wild ride. So, we have recognized South State Corporation's plans to acquire Independent Bank Group down in McKinney, Texas, earlier with an award, a GonzoBanker Award.
Acquisition of the year for banks.
Yeah, and that was a $2 billion all-stock deal that we recognized. But we also would be remiss if we didn't talk about UMB Financial's plans to acquire Heartland Financial.
Yeah, big deal.
That's like a 112-year-old bank that is just doing something really large. I think it's like one of the largest deals that they've ever done.
Oh, sure. And what was interesting about that one to me, Al, is that Heartland essentially rolled a lot of their equity into UMB equity. This isn't your classic cash deal with a little symbolic stock. This was Heartland going all in, saying, if we merge with you, we see value appreciation for UMB in the future. So I like that. Tip of the hat to Heartland team for that. And I think that's what attracted UMB, who's fairly conservative. They're not, going out on the bungee jumping in terms of how they've created value with the family and shareholders over a long time. Yeah.
Well, it's interesting just to look at some of the deals that were announced, because you find some of the serial acquirers in the banking space getting back into the game. So in my hometown of Washington, D.C., I was really happy for Rick Adams and his crew at United Bank when they announced their plans to acquire Piedmont. That was a deal that was approved about a week ago. So here in December, we know that bank is going to cross $32 billion in asset size. Really impressive. They'll have over 240 locations in the Mid-Atlantic, all the way down to Atlanta, Georgia. Not to be outdone, of course, from the Mountaineer State, West Banco also announced its plans to acquire Premier Financial in Defiance, Ohio.
We had Jeff Jackson on Plugged In this year, and that was a great discussion.
We had Jeff on, and he talked leadership, he talked culture, he talked all around why a deal like that made sense, not just on paper, because as we've talked about, any good spreadsheet jockey can make the numbers look great, but the value that it creates for the communities they serve, he feels really confident about.
Yeah, and just core deposits. I mean, to get those Ohio core deposits with your engine, deposits were quite valuable in 24, and that was a good deal from just building a base of core funding for the future.
Yeah, that they were. And again, there's so many deals that we could recognize, but another Gonzo Award winner was Atlantic Union's merger with Sandy Spring. I know that there's some, lyrics that we could, pull from your playlist to talk about mergers of a size like this. But you think Sandy Spring, Dan Schreider's, and his crew running a really strong organization. John Asprey, Maria Tedesco, also a Plugged In guest in the past at Atlantic Union. Like, they're building something really powerful and meaningful, right down there.
Yeah, $40 billion bank. And when you look, it was interesting to me, they became this, DC, Maryland, Virginia powerhouse. The branch overlap wasn't that much. So they really complemented kind of expanding each other at the same time. So it'll be, hope the integration goes well, but it's going to be great to watch that. And that's a very edgy bank at $40 billion.
Well, again, you think about edgy banks, you think about, markets that attract people's attention. I'm from Boston, right?
Yes.
So I live in DC.
I just gave you a Red Sox book for Christmas.
He did.
What's it called?
Here's the evidence.
Amazing Tales
from the Boston Red Sox dugout.
There's plenty of those. I won't make one Buckner joke.
This is
promise.
a page turner. 4 championships, make me sleep a little easier. But I think about what's happening in Boston. So Berkshire and Brookline, Bank, similar size institutions, both are roughly $12 billion in size. A few weeks ago, they basically came out and said we're looking to do something together.
Yeah,
and so we're going to be paying attention to that. I'd made some calculations. It seems like there were about 100 bank deals with an aggregate value of more than $14 billion announced so far this year.
Yeah,
and if you think about that compared to this time 12 months ago, there was only $4 billion worth of transactions that had been announced. So,
and I think one dad in Boston is Enterprise Independent. Now that's kind of cross state, but another MOE.
Yeah,
and this is all the Jeff was earlier in the year as South State was summertime, but this is all the last half of the year. Yeah. So that's why it kind of predicts your look ahead that 25 is going to be busy. I'd also point out the credit unions are very active now in lots of merger discussions. And we talked about a Gonzo Award winner, First Tech and Digital, doing the biggest credit union merger in history.
That's an MOE in the credit union space that has people looking like, wait, this is actually happening here too?
Yeah, a 12 and a 16 to make a 28. So it's going to be quite busy. Now, who can integrate and keep their soul and keep growth? That's going to be the question. Does not always happen. There's been plenty of studies that about 2/3 to 3/4 of mergers do not create long-term value. So we shall see.
We shall see.
But I can't disagree with any one of these deals individually.
Well, you're talking about different types of organizations trying to figure out what their path forward is. The underlying message that we've picked up on this year at Plugged In is it's all around execution. So you can have great ideas, you can have great teams, you can have, spreadsheets that look good, but unless you're actually able to execute, it's all just talk.
Yeah.
And so, when it comes to talk, there's somebody who really talks the talk well. And this is our friend Tom Michaud, the CEO of KBW. Tom's the only 2-time guest on Plugged In.
Okay.
So he's proud of that fact. And we're proud that we have a chance to, talk shop with him. He was on record as saying that KBW expects the banking industry to grow earnings by 6% in 2025 and by 12% in 2026. Largely due to stronger net interest income. He also said large banks will get a boost from a rebound in global deal-making activity. And he notes that investors have really warmed up to the banking side of the opportunities that come around, thanks to improved operating environments and also the November election.
Yeah.
So, that's from the horse's mouth. This is the guy that sees a lot of deals.
Right. You and I have talked about whatever your political leaning, the data shows that in the summertime when things started to change after the debate with Biden and Trump, and you look at the bank indexes on through to the election, to the point where Jamie Dimon a couple of weeks ago was quoted about bankers dancing in the street, thinking about the future regulatory environment. So whatever your leanings, that's kind of some of the expectation there. Yeah. Going into 25. And I think that frees up the idea that maybe mergers will be approved more quickly because they've been glacially, mind-numbingly slow, if you go back into 22 and 23. Yeah.
Well, there's a lot of positive stuff. Now, unfortunately, there's some negative news that I just read before coming in here. It was all around the Fed signaling its intent to keep interest rates higher than investors had expected in 2025. I think they're penciling in just 2 rate cuts for the next year. And so, yes, stocks have across the board rebounded in a really meaningful way, but inflation has been sticky. So I think bankers are still going to be dealing with some.
That was our false surprise, is that Powell started to lower rates, but the long end of the curve went up. And so you didn't get a mortgage refinance boom coming and things like that. And then, there's plenty of talk again of, is Trump's agenda going to be inflationary, and will just economic growth be inflationary? So they're kind of like Gilda Radner on Saturday Night Live. Never mind. Emily Littell, never mind. But so I don't like being a CFO in this industry right now, because you're constantly updating the model and the stress test.
Yeah. If you listen to Plugged In, you're constantly hearing, Jay Powell's name. Sometimes it's positives. I think you called him Santa Jay Powell on an episode. Now I'm not sure that we have the proper description given, today's news.
Yeah, he's become Krampus.
Oh, there we go. All right, so that was one big theme, not tied to any music, but we're caroling our way through this wrap up. I wanted to switch gears a little bit and talk about some of the, kind of tech challenges and vendor challenges that we've made note of. There's operational risk, there's compliance, concerns. We've had a year where banking as a service has really been through the ringer, in a lot of different ways on the tech front, on the regulatory end. You mentioned Jamie Dimon. He's had some pretty interesting quotes about bringing knives to fights when it comes to, making sure the industry is protecting itself and talking about the value it has for the industry. So let's talk a little bit about the challenges that we've started to pick up on when it comes to, some of the vendor relationships.
If I was going to kind of put a theme for tech in 24 in banking, and I've heard this come out of the mouths of technologists and CIOs and even private equity folks who invest in this domain, is complexity. There is a mind-numbing complexity and there's a growing complexity. And some of that is I've got to keep up with digital, I've got to keep up with data and now AI, so I'm adding more. Some of it is the regulatory side. I've now got to be thinking about KYC and AML and everything that goes with that. And some of that is actually the market ecosystem, where it used to be I got everything from Fiserv, everything from FIS. Now I've got a stack of all kinds of things. I've got my digital stack. I've got my contact center stack, my fraud and risk stack. And you just have more applications, more vendors, and a greater need for integration to deliver that customer experience or have speed to market, just as it's getting more kind of broken apart in terms of the different technologies, the new and the old, and the different vendors. So I think if I were a C-suite and was not a technologist, I would understand my complexity has grown. That adds risk, and it adds the need for special kinds of resources. Some internally, I need an IT group that knows how to integrate and work with a bigger basket of vendors and technologies. And I need some partners out there who are like the glue people, who know how to be integrators, who know how to manage these big, hairy projects. But it is not the old world of Daddy Fiserv or FIS will take care of everything in this new world. And you add that the fintech partnerships that we want to do as well. They've got to integrate back into the enterprise and the experience.
Yeah, and when you talk about being in the C-suite and maybe not having the depth of knowledge that I think is required at this point, instead of running from that reality, this is where those vendor relationships become so meaningful. If you have true relationships, true partnerships where you can learn from others, and you're willing to say, hey, I understand that the old ways won't open new doors for us, and I have to get smarter, and it's me that has to get smarter. It's not delegating that out to other folks. I think part of the challenge that we've seen are some of the more established technology companies have been bleeding talent.
Right.
And I think that puts some additional stress and potential risk reputationally onto organizations that may not have the deepest of bench to do the technical work that they need to stay relevant.
Right. If I assume that everything's going to be handheld for me behind the curtain at the big outsourcers, I shouldn't assume that. They're not even saying that anymore. They're trying to be straight. But if I'm not building a capability with partners or in-house, I could have an operational risk. And we've seen this. We saw a credit union get fined by the CFPB this year for a bad digital conversion. So it's not just credit risk and liquidity risk. They're saying, are you managing a complex technology-driven industry in a safe and sound manner now going forward? So I think you're going to see a lot more regulatory focus on how we manage IT going forward.
Yeah. And I think you've been in a lot of strategic planning sessions over the course of the year. I've been invited in to quite a few myself. It's been really fascinating to hear the level of sophistication that the teams are starting to bring in to the leadership, to the board, to say, hey, we have to make sure that we're rock solid on being able to answer certain questions. And we also have to prepare for some that may not be as comfortable to address.
Yeah. And to use our Smarter Bank word, hyper efficient, I'm going to have to get hyper efficient to be able to have some IT folks dealing with the regulatory requirements and some others going speed to market, because I don't want to get slowed down because my IT group is 2/3 of their time just answering exam questions or, putting in new infrastructure to meet regulatory requirements. Where's the customer experience? Where's the new niche capability? How am I leveraging data to drive the business?
And you've talked a lot about that, having that product mindset, that speed to delivery.
Yeah.
The Smarter Bank concepts, they sound nice for us to talk about, but when you actually hear, like April Klubas from Michigan State University's Federal Credit Union talking about speed to market and how she has built up, research capabilities, has been, getting into the university system through NIL deals.
Right.
Now it's legal. all the good stuff that takes place, you realize leadership can't be, outsourced. So some of the tech stuff that we're discussing can't be delegated as well. You just have to own the uncomfortable truth that the world has moved at such a pace that we have to just move faster.
It's kind of a new management measurement you have to think about. I've got my profitability. I've got my risk profile. What is my speed down the highway? Because I can be very profitable, very risk averse. But if I'm not moving, to your point, that probably opens up, our other topic, which is growth. Where are we going to see growth in the industry?
I mean, growth stories are hard to come by. Mm-hmm. When you hear them, you get kind of like all jazzed up and you sit up a little straighter in your seat. You mentioned that your Spotify playlist is back to the classics, right? Remind me one of your favorite songs that you've been listening to this year.
Weird. You never get the unwrapped song. You go, I don't think I listened to that, but it was Where the Streets Have No Name by U2 was my number one song. And I don't remember listening to it. So it's the Mandela effect going on here.
That's how you go to bed at night. You just turn that on.
I do love the intro though. And I probably saw 3 of the concerts on Joshua Tree Tour where they opened with that, of course, famously, but that was my number one. Streets Have No Name.
Well, and you talk about a band that has been able to show consistent growth. I mean, go to the Sphere. How many times did you go onto LinkedIn and have a banker posting from Las Vegas? Oh, look at this cool digital experience that I'm a part of. Yeah. And they're at the Sphere listening to U2 or Dead & Co. or others. That's a story, and it aligns with, the theme that you wanted to talk about, which is growth. Telling a real credible growth story is a challenge.
Right.
There's a handful of banks that are out there that have done this really well. I love what Dave Finley has been doing at Lake City, what David Brager's been doing at Citizens Business Bank. Again, they've both been on Plugged In. We'll drop the, comments that they've made at some point in the show notes. But I just think if you're going to an investor and you cannot be succinct with where your growth opportunities are in the first 6 months of 2025,
right,
then what have you been talking about?
Yeah. And I think it's important, like when you and I do strategic planning, and some of our clients are more commercial focused or CRE, and some are more retail. But I do think there's some things outside of banking right now where you can see incredible growth. The traditional mutual fund industry has exploded with assets under management and taking deposits away with Treasury mutual funds in the last few years. The shadow banking world of private credit, which is over $1 trillion now. A lot of our bankers say, well, they're not really a threat because they don't do the same kind of lending as us. We think when you really dig in, they're trying to do some of the things banks are trying to do. And then we can talk about fintechs. And to me, Al, the chart I've been holding up to people to say, put a lump in your throat, don't be complacent on growth, is SoFi. Yeah. And Noto and the whole group there. And the number I say is when COVID started, they had 1 million members. And you mentioned in the Gonzo Awards, they'll end this year with over 9 million members. So literally in 4 years, 8 million new household members across lending products, investing products, traditional banking wallets. Yep. We should take that seriously. And I tell people, read the book, The Innovator's Dilemma by Clay Christensen. Yep, that talks about
crossing the chasm.
They will come in at a smaller market that you don't deem your most profitable, and then they will scale up and they will kick your butt if you're not careful. So Tony DeSanctis, who runs our education platform, has been quoting 44 million debit cards on the street for the 4 major fintechs, Chime, SoFi, Cash App, and Venmo. So we have to watch those folks, and they're getting growth that we need for funding going forward.
Yeah. And I think what you're saying reflects just the challenges that comes with being a banker today.
Yeah.
There's just so many things that command and demand your attention.
Right.
And so, yes, you've got to think about your team, running your business, protecting the reputation, the clients that you serve, but then you've got to think about how are you going to grow and change.
Right.
And you have to do that growth and change in the spirit of there's a Venmo, a Chime, a Cash App, others that are trying to compete and create an experience that is different from what you're able to deliver.
Yeah. Something cool you brought up I want to bring up here is we talked about M&A, and I got to go out and pay a 1.5 or 2 times book. But you talk about someone who is our regional bank of the year, GonzoBanker this year, Kevin Blair at Synovus. But you mentioned to me, and I didn't know this, that he announced wanting to hire 80 more relationship managers across the footprint. I think the strategic planning should be the buy versus build. Do we buy a franchise, pay a premium, get what we need in the balance sheet? But can we have an organization and a culture and a place for good bankers to go where I want to be an RM on this platform, the Synovus platform versus the Acme Bank platform? So talent becomes important, leadership development becomes important, and it becomes a shareholder value. It's not cushy.
Yeah.
Because if I can get 80 RMs doing 20 million a piece in production every year, I'm going to grow that thing. Yeah.
Yeah. Well, and that's probably a great way to wrap things up is over the course of the year, as much as we've talked about, tech, it's been talent first. You get the right people in place so that you can think about the products and services that you're offering. Then your financial performance, can naturally follow. But it's the people side.
Yeah.
And I want to kind of close, this episode by asking you to talk a little bit about that pipeline concept that you introduced over the summer at a strategic planning session that we were a part of, where you said, it's not like you can just give this to a recruiter and walk away from it.
Right.
You have to treat this like you would a sales project or a lending project.
Just
so talk about that.
Well, just like our sales pipeline, how many banks out there have a talent pipeline that's very strategic, meaning they've gone out, they've talked to folks, they've gone to LinkedIn, they've said these seem to be the RMs that are really, doing good things in my marketplace. I see them at community events. I see them at, economic situations. So I think that is a discipline they have to have. But then there's the whole, and Dave Finley talked great about this, as did Mike Daniels. How do they come into your culture and not dilute the culture? So how do you keep an entrepreneurial regional mid-sized bank, and not let four guys from Citi ruin it or something, and I like the fact you brought up people, because to me, I was just kind of closing out our Gonzo Awards blog that's going to drop tomorrow. And this is the 30th anniversary, Al, of a famous quote by a technologist, Bill Gates, 1994, said, "Banks are dinosaurs. We can bypass them." Here we are, you and I are still talking about banks and great banks and banks creating shareholder value. But it comes down to that. It isn't just bits and bytes, and you can get scale and you can get technology, but our portfolio of people that we get to talk to on Plugged In, they're doing great things in community. They're building niches. We talked about Kim Sponham at Summit Credit Union, who has a mission around female wealth creation in the United States as it ties to financial wellness and financial products. So I just love that connection, and that was the thing the technologists missed 30 years ago about why this industry is cool.
Well, and that's also why I like to use the hashtag own the outcome. Right. A lot of things I put up around Plugged In, because you see people owning it.
Yeah.
And they want to do it. They want to do it the right way, and they're setting examples for others.
Mm-hmm.
And so as we wrap this up, we're going to try to help set examples by tying some of this Gonzo Award talk into what follows this particular episode. We're going to try to stitch it together, I believe, and take what we covered earlier today in Scottsdale, where we recognize some really exceptional banks, credit unions, and technology companies. Mm-hmm. You can hear from Steve. You can hear from me. Also, our Chief Research Officer, Ron Shevlin, our Head of FinTech, Sam Kilmer, and then our Editor-at-Large, Mary Wisniewski. We all were able to aggregate certain ideas that reflect the 210 people that work at Cornerstone on behalf of banks, credit unions, and tech companies on a day-to-day basis. And we all care so much about seeing this industry be successful, which is part of the reason we started Plugged In the first place. Is like, let's talk about the good stuff, acknowledge the challenges, but remind everyone that the path ahead can be done if you go together.
Yeah, and it was fun. We get to announce the awards, but the whole team at Cornerstone is out there in banks, in credit unions, working with vendors, looking at demos, negotiating contracts. They helped give us kind of that fodder to understand and recognize those in the industry that are making trouble, good trouble, and becoming smarter banks.
Yeah,
that's
so
what we
making
build a smarter bank.
Making good trouble is Steve Williams' call sign for the end of 2024. For Al Dominic, I'm just going to say thanks and happy holidays to everyone. And we look forward to seeing folks in 2025, wherever we wind up.
We'll see you soon. Happy holidays.
Welcome in and happy holidays from all of us at Cornerstone Advisors. I'm coming to you from Scottsdale, Arizona, with my main man, Ron Shevlin.
Al, how you doing?
I'm Al Dominic, and together we're doing something just a little bit different today. And we really appreciate everyone taking the time to get really kind of connected around what's happening in the great industry that we're all a part of.
Yep.
So we've got some things called the GonzoBanker Awards that over the years have been written down and sent out in email form. This year, we decided to try something a little different. And, Ron, what could go wrong with trying something new?
We don't have it scripted, don't have it edited like we usually do. So very different this year. We'll see how this goes.
This can go off the rails fast if we're not careful. And, we're going to try our best to keep things interesting, lively, and fun. But this is an awards ceremony of sorts that has its roots back 20, 25 years. And, people talk to Ron and me and various others at Cornerstone about this whole gonzo banker concept. So I thought we'd kick things off by just reminding everyone of a great American writer named Hunter S. Thompson. Fear and Loathing in Las Vegas could be replaced with Fear and Loathing in Scottsdale today, because that Rolling Stones editor really inspired our approach to sharing ideas and information in ways that sometimes rattle the cages, but always provoke something interesting.
It's all about truth telling, and that's our mantra.
Truth telling over fortune telling is the way we are going to roll. And so if you think of, Rolling Stones as a magazine when you were a kid that you really look forward to reading, or like Sports Illustrated, the faces in the crowd, it's that kind of spirit that brings these awards together today.
Oh, you're not talking about the swimsuit episode issue? Which one are you talking about?
Is my wife watching? I don't know. And my mom certainly doesn't want to hear about the swimsuit issue.
No.
But you probably have a Kathy Ireland favorite. Ellen McPherson.
Who?
Oh, I'm dating myself. Okay, I told you this is the Gonzo Awards and this is Cornerstone Advisors. So you're going to get some serious stuff and some maybe not so serious over the next 30, 40, 50 minutes. But if you aren't able to make sense of all this, we are going to put out the written form. You're going to be able to read and see a lot more than we covered today. But we have some really cool stories and things that we want to celebrate as a group. So, Ron and I kind of have our naughty and nice list for the holidays ready to go. We've got some really interesting things to share with everyone, and we should probably just hop right in to these awards, because again, this is a reflection of 210 people that care about the industry and show up every single day thinking about how we can help banks, credit unions, fintechs, venture firms, private equity groups to really make sense of the great industry that we're all a part of. So first award that we wanted to look at is what? And so we have to give like a big round of applause to our friends at South State. This is a move into the great state of Texas that deserves tons of accolades. Independent Bank Group is also a wonderful organization. And to see this, deal announced really was a signal that the M&A wave that people have been speculating about over the last few years was really coming home. This is one of the biggest deals we've taken note of, but it's one of the opportunities for a bank to really expand its footprint. To move into Dallas, to Houston, Austin, and Denver. We just want to give a tip of the cap to the team that's there. Really awesome work on both sides to make that deal happen.
Yeah, I also got to jump in and give South State a good hand for the work it's doing on a technology front, specifically with AI. Work that Chris Nichols and his group do there is definitely industry-leading work.
Totally. Shout out to Chris, because if you aren't following him on LinkedIn, this is the shameless plug to do so. He is wildly prescriptive in his own right and really does a wonderful job of sharing how the bank is trying to position itself for the future so that it inspires others to create some stability in the marketplace. All right, so that's a big first award, and M&A is a topic and issue that we all know drives this industry. Over the last 20, 25 years or so, consolidation has been the name of the game. And so that bank acquisition of the year really is important for us to shout out, but so too is the bank merger of the year. And so this is the second award that we want to put up. So Dan Schreider and John Asbury are the two CEOs that will take the bow for this, but really it's the teams behind both that need to get some proper credit. Now, I realize this technically was an acquisition with $25 billion at the time, Atlantic Union acquiring Sandy Springs. But when you think about the Mid-Atlantic and how competitive it is and how wonderful that geographic region really looks, this is a deal that we just thought has to be given as proper kudos. And I love what both Dan and John have done to build their teams and their cultures, and we really hope that the integration of the two goes smoothly and as effortlessly as possible. So we've got two banks that have hit the highlight reel already. Those of you who know me would probably laugh when I say it's time to talk credit unions. And Ron's probably one of those because, there's some really interesting stuff happening in the credit union space. There was a deal announced this year that I think will not surprise those who are familiar GonzoBank readers,
Yep.
but we still have to put it up on slide. So let's see who our credit union merger of the year will be. So this deal between First Technology Credit Union and Digital Credit Union really got people talking. It's the largest MOE that I'm aware of. I don't know if there's one that I'm forgetting, but certainly to see what Shruti and Greg, the two CEOs, look at and aspire to create is impressive. And Ron, I know you've got some kind words to throw their way.
Yeah. Well, first of all, you got to remember that so many other credit unions and banks are merging just to get to the size of one of the two of these credit unions, let alone the combined size of them. I think it's really important to recognize, Al, that this is not just a deal about reaching scale, because they already had scale. Steve Williams and I had a chance to talk to Shruti and Greg right after the deal was announced, and one of the things that stood out to us was they're going to be spending $100 million a year in technology and innovation to develop digital products. And I think that's the key, is that they really understand that this is all about digital now.
Yeah. 100 million is nothing to laugh at.
No.
And it's, again, one of those deals that it gets announced, you do a double take and you come back and say, that's going to be pretty compelling if they can pull it off. So again, we're just sending our best to both organizations as they start to think about how they're going to take those steps forward. Now, we've had a great run over the last 12 months talking smarter bank concepts with various folks. Money gets thrown around. 100 million is a nice, round figure to talk about. But it's not always money that drives, the decisioning of the judges for the GonzoBanker Awards. It's performance, it's execution, it's the cultures, it's the identities that are being shaped and shifted, as we go forward. And so you mentioned earlier that we're trying to be truth tellers. I said we're not trying to be fortune tellers. And we really want to, give our credit and acknowledgement to some of the folks that are getting smarter in their business setting. So, Ron, you've got some things that you want to talk about.
Yeah, before we do that, though, let's talk 30 seconds about the whole concept around Smarter Bank and where that came from. You, I'm sure, remember
reading your book
10 years ago. Was it my book?
Is this a shameless plug? Can we put a link in the comments so that you can buy the Smarter Bank 1.0 version that Ron's alluding to?
I believe it's available on Amazon for like 45 cents a copy now.
You discounted it for the holidays.
I don't have to discount it. It's a bargain sale at this point. But yeah, the term Smarter Bank came around 10 years ago, when came to the realization it wasn't enough to be a smart bank. You really had to be a smarter bank. And we now at Cornerstone have kind of developed the thinking around that a little bit to really understand that there are a couple of things that you've really got to do well as a bank or a credit union these days, Al. You got to not just be efficient, you've got to be hyper efficient. You've got to have a differentiated strategy. You've got to be nimble. You've got to be data driven, and you've got to be opportunistic. So we're going to give awards in each of those categories. So let's see who the winner of the Smarter Bank Hyper Efficient Award is.
Hyper efficient being the
East Coast Credit Union. Hats off to Tim Antonishin and his team, who, Al, they are ardent students of efficient operations. There is a dedicated operational excellence team there. They've done extensive process automation work, and it's paid off with a 2.5% non-interest expense to asset ratio.
Yeah, I mean, it's a pretty cool story. Now, I will say that Ron, over the last few months, has been teasing me about hyper efficient. He's like, aren't we just trying to get to efficiency? But I think this is an example of when you hit certain performance thresholds and you say, I'm not done, I'm going to continue to press forward. And that's a big reason why this award is being presented as it is.
So yeah, Ron, this is Steve Williams. Knowing these guys, I think importantly, to your point, they never think they're done with efficiency, if that makes sense. So working with a technology company, we'd give a hats off to Clasys. They've done a lot of process robotic automation. And with that op excellence group, they're never done. And I think that's one of the messages of building and maintaining a smarter bank.
Steve, you just like scared the heck out of Ron and I.
Did you know Steve was even on the call?
It's like the voice of God just showed up at the awards.
Long-time fan, first-time caller.
You know, it's only because Steve is 15 minutes late getting to the office that he's not sitting on the couch with us.
Yeah.
But all right. So, and as I think about Steve, I know we're going to have some other famous Cornerstoners hop in. So just to warn people, it's not just going to be Ron and my voice that dominates this discussion. Awesome. But I do want to give you the floor for the next Smarter Bank Award.
Yeah, next Smarter Bank Award is the Differentiation Award, and let's see who the winner is. And the winner is Western Alliance Bank. Ken Vecchione and his team there has grown the franchise now to $80 billion in assets, Al, but with a strategy that is focused on some very specific and potentially risky niches like homeowner association, hotel franchisers, the entertainment and gaming industry. And they do it with a lot of industry and credit expertise, and the result is,
it's
net interest margin that exceeds pretty much anybody else at that asset level. And I think we got to give them huge kudos to the fact that they have totally nixed the naysayers and short sellers who back in 23 were writing them off.
Yeah, I give Ken and his team, just tons of credit, because you're right. They were getting taken down when we go back to, Signature, and what's happening, the concern in Europe with Credit Suisse. I mean, there was a lot of panic and, just trepidation around banks of their size. And to watch, Ken and the team not just rebound, but really rally and do something really impressive is awesome. Now, I figured that Cornerstone gave that Western Alliance Award because they're here in the great state of Arizona, which is where Cornerstone is. I know Ken has some great tickets to basketball games and things like that. So, it could be that we have a voter or two that's hoping for the Suns game to show up in their inbox at some point.
Yeah.
That's probably Steve Williams looking for some tickets.
Yeah, all right, exactly. Hey, guys, just in the dark days when the shorts were doing their thing, this stock got down to like 27. It's now quadrupled in 18 months. And I know Ken and the team believed in it. And so that's making trouble. And I really respect what's happened there, and great long-term performance. This was started by Robert Sarver of his kitchen table, 20 plus years ago. It's a great story of entrepreneurial banking.
Yeah, and I actually, to that storytelling point, I want to give a shout out to my friends at Bank Director who put together an event where they brought Ken and their board chair together just to share the journey that they'd been on from starting the organization with Robert through the dark days to picking things up. And again, I think it's that spirit of community and being honest and transparent about what didn't work and what did, and letting people understand there's not just one way to run a business, and there's not just one way to treat your team. And so we give, all kidding aside, tons of kudos to Western Alliance and what they've been able to do over the last 18 months. So let's keep going on the Smarter Bank. I like the way we're hitting it.
All right. Jack be nimble, Jack be quick. Let's see who wins our next pick.
Wow.
All right, and kudos to SoFi for the Smarter Bank Nimble Award. Totally be honest with you, Al, I only picked SoFi because I was hoping to get Super Bowl tickets out of this.
Wait, that's the way I was volunteering to announce it, because I was hoping to get out to LA too. That stadium is massive and incredible.
Right. Well, in all
maybe we can share it. Maybe we'll go together.
Oh yeah, can I give you the first half? You can do the second half.
Why not?
And we can share the super.
You pass me the swimsuit issue, and I'll see you at halftime.
Okay, sounds good. But seriously, why did we pick SoFi for the Nimble Award? Number one, stock has moved back to close to 100% this year at an 88 times price earnings ratio. But it's really about the strategy, Al, the growing diversification away from loan income. They've seen breakout growth from third-party loan platform, which generates fee income, the growth of its Galileo technology platform. They got many engines for future value, and it's paying off with a growth of from 1 million members back at the time of the pandemic to over 9 million members so far. So very nimble, and I think that's why we give them the award.
Yeah, no, they've done some pretty
If
impressive
I could
stuff.
add something there, Al.
Oh, it's our man Sam Kilmer.
There we go.
Come on in, Sam.
Hey there. I just wanted to say real quickly about SoFi. One of the things I find really interesting about them is they're a fintech, they're a bank. Wait, they're both. So, I mean, I think that's another sort of sign of the times. But back to you.
Sam, is that a special holiday hat that you put on for this special award ceremony?
It does. It does have that Santa Claus kind of almost red that I think Steve Williams is rocking in that velvet smoking jacket over there. So yes and no, Al. That's my
Well,
Dodgy.
we wanted to, not in this awards, but in some future awards, we might give the Sam Kilmer Hat Award. The Mad Hatter is what Ron and I are thinking about calling it, but that's for future use. We've got some other awards that are more immediate.
Awesome. All right, let's go to the next one, the Smarter Bank Data Driven Award. Let's see who the winner is. And hats off, no pun intended, to Aaron Graft and his team at
You had
Triumph
to do
Financial.
it. You had to do it,
I
didn't
had
you?
to do it. Had to do it. Hats off to Aaron and his team at Triumph Financial, really winning out because of their Triumph Pay platform for the transportation industry, really focused on being the frictionless center of presentment, settlement, payment experiences for truckers, carriers, and shippers. And the result has been a stock that's trading close to 3 times their book value.
Yeah, and from the outside looking in, just such an incredible story, and being able to differentiate the business to, people talk about diversification, differentiation, as key components of their future growth. But I look at what they've been able to do, and it's just amazing. Now they're down in Texas. I don't know how people feel about the college football playoffs. I realize I didn't go there, but I'm throwing a hook 'em horns up. No offense to those who went to Texas A&M. We will not be gigging them here because I don't know if people know Ron Shevlin has a UT background. So can I get a hook 'em horns?
Absolutely. Way to go.
All right, so that's going to be the plug from this side of the country.
But Al, I gotta jump in here. I hope one of the quarterbacks will play because Belichick's sucking them both through the transfer portal right now with dollars. So we'll
Look,
see what
I'm a
happens.
Patriots fan, so don't tease me because just do your job, Steve, and show up on time and sit on the
Yeah.
couch with us.
74-year-old man building a pro team in North Carolina now. Here we go.
Life is good. Just living the dream. All right, so we're living the dream still because we got one more award that we want to throw out.
Last Smarter Bank Award, the Opportunistic Award, and let's see who the winner is. All right, and the winner is Fifth Third Bank, Al, for its dual pursuit, that is, of a Southeast market expansion and fintech strategy. They are planning to open 50 branches a year over the next 4 years down in the Southeast. Very impressive growth and efficiency numbers on the board with its Southeast expansion. But also because of their innovative strategies on the fintech side. They've got a BaaS play with Newline, embedded payments provider, API platform, and the Provide division that's through the healthcare acquisition, fintech acquisition they made in 2021.
Yeah.
So very opportunistic, and Tim Spence and his team there have done an amazing job.
Yeah, and this is a story that I think it has its roots even before Tim was running the show. Greg Carmichael, great CEO, retired, but I want to just, give a little added, flavor to this. The transition and the succession plan that they put together, where Greg and Tim were able to, really effortlessly, at least on the outside, switch positions, from Tim going from the second seat to the CEO, Greg becoming the executive chair. I think it's one of those real wonderful examples of how leadership, manifests itself. Right now, succession planning and really, talent acquisition, retention, development is top of mind for so many. And so when you see examples of a bank of this size that can get the leadership transition right, it gives me confidence that we're in the right space. And we've got people that are giving good stuff. Yeah.
Hey, can I just add something real quickly? Going back to the point that we raised about SoFi. Remember, SoFi acquired a bank in Golden Pacific Bancorp. In this particular case, we have Fifth Third acquiring a fintech. So it's sort of like bankers. What is it? Dogs and cats living together, mass hysteria. We got fintechs and banks, acquiring each other, and it's just making it a really interesting soup in the industry.
Yeah. And also it's a new world, old world. So new world, they're buying fintechs and they've got a 45-year-old CEO who comes from tech. And Old World, they've announced 50 branches a year in the Southeast for the next 4 years. So I think it's interesting how they're mixing the two things as well, guys.
Yep.
Sure.
I totally agree with you guys, and thanks for chiming in. Now, we have a very special part of the Cornerstone team that's been patiently sitting, waiting for her moment. So I'm going to let you introduce her.
Yes, absolutely. We're finally getting some of the good comments in here and get
Now
our
we get the smart
colleagues.
folks coming on.
Yeah, let's talk about smarter bank. Let's get one of our smarter colleagues involved here. One of our content folks, Mary Wisniewski, who I'm sure many people on the call will already know. Talk a little bit more about the fintech side of it. Mary, you there?
I am here. Thank you for that introduction. I do intend to bring it right now. And so, hi, everyone. I'm calling in live from my parents' condo in Michigan. So, I just wanted to set the stage a little bit about fintech because I was thinking of like, how would I describe this year in fintech? And honestly, I think I describe it as, because it's been so many tales. On the dark side, the Synapse bankruptcy has been such a mess. And so, I don't think there's ever been a bigger taint for fintech. But on the other hand, we've ended on some really big deals. Walmart's fintech offering got a huge amount of money. Ditto of the neobank Current. And there were also some big acquisitions. Moneyline and Bridget were both acquired. So there's a lot going on. But let's focus on some of the awards. Let's hit it. Okay, so I'm really a fan of this innovation, and it's from one of my guests that was on Money Isn't Everything, Laurel Taylor, and she is the founder of a company called Candidly. And this is kind of a hybrid award because there was a policy change called the Secure Act 2.0, which made something happen that's like an interesting offering now from her startup, and that is like when someone pays down their college debt, the employer can match it in the tax advantage retirement account. So it's not only something that helps a firm retain their employees, but it's also like widening who is saving towards the retirement. So I think it's really cool, and she's a really smart founder. So that's who this award goes to. And let's move on to the next one. Okay, this also is a goodie because we all know fraud is really here and seems to be rising all the time. But the good news is, there's a lot of technologies that are helping to try to zap it before it enters the banking system. And there are a lot of leaders, working on this, making it better than just serving up knowledge-based answer questions like who's your favorite TV show, something I've had to answer as Sailor Moon even to now. So I'm glad it's changing, but we're looking to leaders like Alloy, Sardine, Effective, which was acquired by Socure not too long ago. And they're looking at everything from like, how fast are you typing? Is this email coming up a lot? So it's helping banks and credit unions ideally zap fraud before, it enters the system. And I do have one stat from a wonderful colleague, John Meyer, who pointed out a stat from Alloy's research in 2024. And it is that identity theft, synthetic identity, and account takeover fraud accounted for 31% of all fraud losses by U.S. financial institutions in the last year. So that's food for thought. And now I want to hand it over to
Mary, I got to join on this, though. I did
in,
about
please.
20 strategic planning projects with banks and credit unions. This fraud's going nuts. This was one of the number one topics, and it goes all the way up to the board. And the fact that we have institutions that have more fraud losses than credit losses this year. I'm glad that there's a lot going on around, bringing fintech into problem solving here. Also, Tony DeSanctis, who's monitoring our chat, and we do a monthly fraud roundtable where fraud officers come on. We get about 50 fraud officers per meeting talking about how are we skinning this cat. So I'm glad that we picked this technology because it's the most important problem to solve in the industry right now.
And there's nothing I'd love more than to introduce Sam Kilmer, the host of Fintech Hustle. And I know he's going to take us through a journey of multiple awards, including the Golden Cufflinks.
Yeah, Mary, it's been an exciting year. Maybe not as much deal flow coming through fintech this year in terms of mergers and acquisitions, but a lot of organic growth activities. You pointed to some of the deals that were happening, which I think was great. But I think the other thing we like to do at Cornerstone is celebrate. Gosh, there's so many people out there on the road, hanging out in the Hampton Inns, doing demo sessions, meeting with banks, trying to get these guys moving to the next level. And there's just so many hardworking people in the kind of fintech vendor world. We like to celebrate some of the people that are really doing a great job of, doing great presentations and making life interesting. And so we had the Golden Cufflinks Awards. And who is our first winner? So let me talk a little bit about these two winners in Mark and Tamu. And by the way, I may be wrong, but Al and Ron, I'm pretty sure that music was either the Love Boat theme or some derivative of the Love Boat. And that's one that I don't have on vinyl yet. So let's make a mental note.
To the Love Boat or to CBS. So we're going to just have that elevator music just live in your brain, Sam.
I don't know. It could have been a Fantasy Island one too. I don't know. I'm kind of going back to my.
We're talking Golden Cufflinks music. Let's hear about our winners.
Right on. I hear what you're saying. You're saying move on, Kilmer. So listen, Chris Miller and our digital transformation team pointed out that Mark Starrybrat has just, from Five Vision, by the way, has done just such a great job. He basically makes sure in demos that you're really talking about the client's outcomes. Like, what are you trying to solve for? And then really working the demos around those solutions. The reason why that's so important in the case of Five Vision, which is deposit origination, is you might have heard that deposits were a big deal this year in the banking world. Most solution engineers, when they're doing demos, are used to saying something like, hey, this is what the product does, this is what you get. This is how it's going to work. What Mark does is he always ties together how the system works with what the client is trying to achieve. And rarely do we see people really focusing on that, and almost never have we seen anyone focus on it to the degree that Mark does. So shout out to Mark and the team at Five Vision. And also Tamu Tarlaje from Jack Henry Scimitar has just really nailed it. Steve Wildman, who leads our core transformation team, just talks a lot about Tamu and how he establishes not only a great connection with the people in the room, meaning on a sort of a very personal level, but he really, really knows the product that he's showing well. That may not sound like a really high standard, but engaging the audience and knowing the product well are great starting points. But what Tamu really does well on top of that is he has the best demo data. And so making, kind of realistic and good stories, he weaves in references to El Chapo and the Golden Girls into an account opening demo within a 30-second span. That's just the kind of fun that you don't always see out on the road. And if you meet Tamu, he's not your grandfather's Jack Henry, and you better bring along your neon green Post-it notes when you do meet up with him. So shout out to Mark, a tip of the hat, I should say, to Mark and Tamu.
Wonderful.
And I guess we also have an award here coming up for the Vendor Acquisition of the Year Award. And who is our winner? Okay, now that was not the Love Boat theme. I really like that one. But I just a couple things, 3 deals that really jumped out at us. So we have a 3-way tie here. I would point out that the deal that happened in September, where Veritas Capital acquired what is now called Candescent, which was then called NCR Voyix Digital, $3.5 billion acquisition, and that was a really big deal. CEO Brendan Tencel Chief Product Officer Doug Brown. Lots of work that went into that. Brendan, by the way, quick shout out, is going to be a guest on the next upcoming episode of Fintech Hustle, so don't miss it. So that was a big transaction, and it had the private equity world swirling during the summertime. And also, I say we had to put in some other ties here. There were a couple other great transactions. One, Moody's acquired Numerated, which Numerated in the loan origination space. Moody's also in loan origination, but you may have heard they're kind of a big deal in credit analytics and a lot of other things in credit and market analysis space. So big acquisition there. And then also what I would call a pearls on string acquisition that CSI did, sort of two of them. One of them was deposit and loan products provider Velocity Solutions acquisition that they had this year, but also combined with an acquisition that they did late last year. Those sneaky little rascals, they snuck in a transaction in December after the GonzoBanker Awards were announced in Hawthorne River, loan origination systems provider. So those two acquisitions together are what we would call pearls on a string, and really, really exciting developments there. So that's what we would call the vendor acquisition deals of the year. And I think, I don't know, team, if we want to move on to the next one, or for any comments from the...
I got a couple comments, Sam. One, hats off to the O'Malley boys for Numerated and what they built there. And I think it's a great example of some of that grit coming out of a bank itself with Eastern Bancorp and the Eastern Labs. So everybody remembers how they got on the map during the PPP crisis, and we need something fast. But just hats off to them. I think it's really cool, the idea of an AI-driven credit memo. We'll see what happens there, but that's one of the visions that I think Moody's saw in Numerated. And then with Hawthorne River, just a great company that loves its customers. So I think everyone I know who uses Hawthorne River and went to their user meetings always felt very welcome, and that grit of working in changing loans with technology. So hats off to them being part now of the CSI team.
Yeah, tip of the hat indeed. So that was a pretty good tour, I think, of some of the deals that happened in the space from a acquisition and a merger and a deal position, Mary. I think what we wanted to talk about next, if I'm not mistaken, is we wanted to talk about the core system deal of the year. Is that right?
Yes.
Boy, this was a big deal. I got to tell you, for years and years, and I think at GonzoBanker, if I'm not wrong, Steve, we've been talking about how the global core providers, those companies who have their headquarters outside the United States, have really been challenged to make inroads in the U.S. But we saw it in a very, very big way with, I believe this is the first time, or one of the first times, that a global provider that's headquartered outside the U.S. has won deal of the year for bank core deal of the year. And this goes to TCS, Tata Consulting Services, TCS Banks, for a March announced deal that they had with 20 billion asset central bank in Missouri. Now this follows on a win that they had, I think it was a decade ago, TCS, with Zions Bank. That was a deployment that was in process over the last decade. I mean, just a long-term transformation effort. And if you kind of combine those two together and just look at the progress there, we have an $87 billion bank in Zions, followed by a $20 billion bank in central bank signed. Jim Washburn and the TCS team have really been focused and heads down on getting these clients stood up and happy. And more and more regional banks, are looking at alternatives to, what I think the industry is referred to as the big three core providers. And it's a big opportunity for TCS and a lot of the other global providers out there. No, if you guys have any other thoughts.
Well, no one would argue that Zions took longer than expected. I think even Harris Simmons, their fabulous CEO, would say that, and he has recently. But with that more complete. And a second deal is always important. And so, yes, this is, to your point, Sam, the first global provider to win Core Deal of the Year in 23 years of Gonzo Award history. So congrats to TCS.
And this one is a really interesting one. We have Correlation winning Genesis Credit Union in Michigan. This one is a really interesting one for several reasons. I mean, one of them is not just the size of the deal. I mean, Genesis is 4.8 billion in assets, so it was the large credit union deal that really had our eye. But I think the other reason, a couple other reasons why this one really came to mind was the CEO of Genesis, Jackie Buchanan, is an industry veteran and extremely well known, not only in business circles and on many boards in the credit union world, but she's also the former CIO of Genesis Credit Union, and has been involved heavily in the like the CUNA Tech Council, and so Jackie is very influential in the credit union movement, with a career that leans into tech very publicly, as I mentioned, on multiple boards and councils. But also, we should just point out, Rob Landis and team at Correlation are on an unmistakable growth tear several years in a row, and I think they won this award last year as well. So a big win and a second year in a row for Correlation for Genesis Union.
Yeah, and there were some good wins with
the
Jack Henry.
The next one that we have. Oh, go ahead, Steve.
Oh no, some good wins for Jack Henry Epicus, some good wins for Fiserv DNA in the credit union space, but this was a big one, the biggest one from an asset size at $5 billion.
Yeah, actually, there was a lot of deals out there, and so it took us a while on this one to narrow it down because there was just so much activity. So very exciting, and I think the next one we have is the digital deal of the year. If we could go ahead and cue the award. Really exciting development here, and sort of like let's just call it the sign of the times, with Q2's win of Byline Bank in Chicago, $9.4 billion in assets on both retail and business banking. And I say sign of the times because more and more mid-sized banks are moving to the same platform for both retail and business. And this is definitely something that Byline was focused on. And also in terms of thinking about their growth, but also it's something that Q2, this has really been their kind of what I would call their combo meal, which is if it involves retail and business together, Q2 has been at one of the leaders in this area. And candidly, I think for a very similar reason, Q2 won this award last year. So as with in the case of Correlation, and I think also in some others that we're going to be talking about, this is the second year in a row for Q2 for Digital Deal of the Year for banks. So congratulations to Q2.
Great. How about on the credit union side, Sam?
Let's bring up the winner. Love that music. Let's keep on that. The Digital Deal of the Year in the credit union was Candescent, the artist formerly known as NCR Voyix's D3 Solutions, their June win of Golden One Credit Union at $19.5 billion in assets. This is the nation's sixth largest credit union, so you can just imagine how big of a deal this was, both for Golden One as well as for NCR now. Golden One's management pointed to wanting to kind of drive their own destiny. And if there's one sign of the times here, we're seeing more larger credit unions and some larger, even mid-sized banks who are wanting to do some more customizing. And whether that's with a toolkit or whether that's with a complete dedicated deployment, with D3. I think this is, in the last 5 years, this is the third deal of the year that D3 has won. And so tip of the hat to Doug Brown and Brandon Tansel and the teams at Candescent.
Yeah, and hats off to Donna Blandon, team at Golden One. This was a long time coming with some things that they wanted to do in digital, and candidly were kind of on some legacy products they knew they had to get off of. So their search was very diligent. A lot of people competed for this essentially $20 billion credit union. So hats off to Donna and team. Al, we're going to bring it back to you. I think you were going to talk about the award blog and then a little bit about what's coming up in 25. I really missed the couch, so why don't you give us what's coming next?
You're always welcome to join us, but I will tell you that before you do, is it wrong that I want to see Sam's dog somehow barge into his office, or like Mary's parents like just open the door and say, "Are you really in here?" Yeah, I'm also looking at Ron's zip. I had no idea that Cornerstone offered blue zips like this. Is there a merch store that I can shop at to find such interesting swag? I mean, here I thought it was a tie, and jacket day, but evidently casual.
No, there is.
I want Mary to be in a Hallmark movie where her mom brings down an old boyfriend from high school who just happened to drop by the neighborhood. Something fun like that, nostalgic, Mary.
Could she start a store and maybe find out that they secretly have been looking at each other for years and years, but didn't know that they knew each other?
There are a few people that might have a problem with the story.
Here we go. What could go wrong going live, Ron?
No, nothing.
Nothing could go wrong. Okay, so Steve, you did ask me to talk real quick. This is just the tip of the iceberg. We have a lot more awards that are going to be shared and recognized in print form. So we're excited for that. I did a terrible job of teeing up some of our, hosts. We've got some great series, whether it's Mary's, Money Isn't Everything, Ron's, Fintech Hustle.
No, Sam's Fintech Hustle.
How about that? Again, go live and you can't make anything up. So Ron's got what's going on in banking, not just this digital series, but he's got a great research report that's about to drop. I don't know if you can give just a teeny little heads up as to what people could expect in January, but is darker days ahead, or is there some light on the horizon?
Well, let's put it this way. They're expecting a lot of light on the horizon. One of the key questions and first questions we ask in the survey is how optimistic are you for the coming year? Compared to going into 2024, going into 2025, a lot more optimism going in.
Yeah.
And the other thing I'd point to, a lot more use of technology and AI in particular.
Well, and to look at those tools, look at the technology, it still comes back to people. And so we have a few last awards that I know we want to give. If only my man, Santa Claus, could show up. Here he is.
Al, I bring gifts. I bring you champagne for the holidays.
Good tidings from Steve Williams.
I bring you eggnog.
Awesome.
Good to see you guys.
All right, snuggle in because I think we have a few awards left.
We've got 3 awards left.
And our studio is about to fall over thanks to you coming in. So let's do this before it does.
I think one of them we might accidentally, because you said we were going live and wild, we might have tipped our hat a little bit. But let's first go to our first GonzoBanker of the Year award for regional banks. Yeah, I know you had Kevin Blair from Synovus on Plugged In.
We had Kevin Blair. We had Kevin Blair on.
We wanted to tip a hat. Synovus has always been a dynamic regional banking organization. They don't just want to be, hey, let's lend on commercial real estate. They like to do tons of things. But this was a great year for Synovus and Kevin and his team. 43% stock price appreciation this year. Think about this, running and innovating in the future, but knocking out a 17% tangible common equity. So what we love about Kevin, he's a big fan of culture and leadership. To him, that matters as much as the balance sheet and the income statement. A lot of work done in the technology field under CIO Max.
Mad Maxey,
yeah.
Zach Bishop, you've got
Zach Bishop and team. So just a great team. So Kevin and team, hats off. Kevin Blair, GonzoBanker of the Year for regional banks.
Awesome.
Let's check out in the mid-size entrepreneurial bank space. Who's our GonzoBanker of the Year, Al?
I think we got to give a little drum roll for this one because we're still going down to the great state of Texas.
Oh, we are. right. So, guys, if you don't know about Veritex Bank and founder Malcolm Holland, I encourage you to do a little research on this great team. Look at this, though. Malcolm formed his first bank when he was 26 years old. Think about that. And you want to talk about troublemaker. Malcolm formed Veritex in 2009. Now, what was going on in 2000? Oh,
It was
the
quiet.
Great Recession.
It was a quiet period in the country's history.
The banking crisis, TARP.
Occupy Wall Street. Everything was.
Think about
was
a guy
roses.
going, "Hey, I know, let's start a bank." We're in the middle of a banking crisis, but they took that dream at Veritex. They now are closing in on $15 billion, $1.6 billion market cap from a dream 15 years ago. And we love about Veritex is how the name ties together their mission, bringing truth, transparency, and integrity to banking. We're also big fans of CFO Terry Early, who's done a lot of great entrepreneurial things in banking. And so the team at Veritex is rocking, rolling, creating really Texas's bank right now.
Yeah. And you talk Terry and our partner, Eric, are going to be at Acquire Be Acquired talking about some of the smarter bank concepts that Ron had. So you can check that out. But Malcolm also has been generous. He's going to hop on a plugged in with you and me. I think we're recording it tomorrow morning. And we're going to talk about this. We'll drop that to start 2025 to get the ball rolling on entrepreneurial behavior in the banking space.
Yeah. So early in the year, check in, plugged in. We're going to have Malcolm talk about this great story.
And he didn't even know that he was winning the award when he said yes. So
he didn't know he's going to win the
saying
award.
that.
So there's no payola here at Cornerstone. All right, let's go to our final award, and that would be GonzoBanker of the Year in the credit union industry. Drum roll. It is Kim Sponham at Summit Credit Union in the Madison, Wisconsin area. Guys, we love our clients. We love folks in the industry out there who knock out the numbers, but also do great things. So if you haven't studied Summit Credit Union and Kim Sponham, I encourage you to do it. Kim became CEO 20 years ago when this little credit union was $200 million in assets. Now they're knocking on the door of $8 billion in assets. But more importantly, Kim has really focused on the financial wellness of the female head of household as her thing, her differentiation, Ron, as you said. And she gives some fabulous statistics about she focused here because women live longer, they save less, and during their careers, they earn less. And so they're 43% more likely to be in poverty during retirement. Kim has made this and other issues like pay equity her issue through financial education. She's got a great program called Red Shoes, where she coaches women about becoming millionaires. And so I think it's a great example of making trouble by high performance and incredible growth. Becoming a large credit union, even buying a bank along the way, but also being very mission focused.
Yeah, and this goes right back to that Hunter S. Thompson spirit of just being gonzo in the way we're approaching it. It doesn't matter your size, it doesn't matter your location. It's what you're trying to do to help others, and I think it's a wonderful award, totally appropriate. And it's great to have you here on the couch.
Yeah, and very creative. And I think what we love is the fact that there are thousands of troublemakers out there, regional banks, community banks. Credit unions and the fintechs that support them. That's the grassroots of America. This holiday season, we want to keep that alive. But Ron, we don't want them to be dumb. What do we want them to be?
Smarter.
Hyper efficient,
data-driven,
differentiated, opportunistic, nimble,
all right,
opportunistic.
Look, as we wrap up, if we do this again next year, here's the bow tie I was going to wear. I might just gift this to Ron if he'll trade me the spiked eggnog that Steve just brought in. We might enjoy a little libation together just to toast one another. But I want to echo Steve's point. This is from all 210 people at Cornerstone to everyone who's tuning in. Happy holidays. Have a great time. Thanks for allowing us to be part of your conversations, part of the journeys that you're on. And just, let's keep getting after it. This is too important a business to leave to others to be successful at.
Yeah, make trouble, build smarter banks. See you guys soon.